the basic bottom line, mobilizing of additional resources. So we're talking about pension funds, sovereign wealth funds. We're talking about the diaspora even coming back in, and the mobilizing of, as somebody put it, they said there's not a shortage of money. That's not the issue. So so there was a lot of reference to that, and much emphasis on that. Also, there was some quite practical suggestions, one or two that I heard during the tea break rather than, or lunch break rather than during the conference, which I thought were rather good, and I wanted to mention them. Project development teams to look at the pre-feasibility issue, which we spoke about quite a lot, to bring risk mitigation instruments more. These are the more sort of general things, and I'll get to the specific things. Then create a platform for project developers was another idea. And I banged on quite a lot about developers and the gap between project sponsors, developers, operators, and the funding agencies, which are becoming more complex, and there's so many more of them, and equity funds and all kinds of things. The complexities of public-private partnerships, like one person said, we should not put PPPs in a box. If we start boxing these things, then we start inhibiting ourselves and so on in the process. As I say, sources of finance vary. One good thing that I don't think gets enough attention is why don't we ever look at what we've got already? You know, what have we actually got? There are two issues here. There's what we've got, and then the maintenance aspect. You know, we're not good at maintenance in Africa. And we should look, like for example, Guinea Conakry. They stole the line and sold it off at the port during the war. But never mind that, there is still the routing of the line that's there. So why create another trajectory? Why create another route? You're just going to increase the costs, and yet that's what they want to do. So, and there, going back to the different sources of funding. I mean, there wasn't much emphasis at all about it here. But I just wanted to say that export credit agencies should be looked at. We have Africa Trade Finance. We have ECIC in South Africa, which also has a supplies credit product that John Sainsbury referred to from Crisco Project Finance, which is very much NEPAD orientated. It's one of those ECA deals that really concerns the buyer in the market, in the other African market, and not just the South African exporter. I know that sounds airy-fairy, but if you go study it, you'll see. So the panel of experts was suggested. There was a concrete suggestion. There was quite a lot of interest when there's reference made to the possibility of an infrastructure balance sheet, a national infrastructure balance sheet, so that you can get accountability and you can measure developments. I mentioned the backlog of maintenance. Human capital is a major issue that came up quite a few times. Unsolicited bids, what problems are we trying to solve with the unsolicited bids? And maybe we should set up a special team to investigate unsolicited bids, because from a practical sponsor point of view, for unsolicited bids, I mean, I know there won't be one size fits all, never. Each case will be different, but there must be some common threads that we need to pull together to see, because I'm seeing the prevalence of unsolicited bids all the time. We spoke about the pension funds, and we saw that in the South African case there is margin for operation cross-border in Africa, 5% in the one case, 30% in the other. So that pension fund thing we debated at length. We're lucky to have NEPAD Commission talking to us about the PIDA and PC projects. That was very useful, and the fact that they're now going to have a database on it and so on will be very useful. I know that's what I supply to my clients, and I know they appreciate that very, very much. So I think it's good to get practical like that. And also when you can see what stage is the project at. Because I can tell you, when you're in business here, you're interested in two types of project, greenfields and brownfields. Why would you be interested in anything else? You're not collecting projects on an academic exercise. You want to go into projects where you think you can make money, as much money as quickly as possible, unashamedly. So 85% of infrastructure funding has been from the public sector, and this has to change. And that was mentioned a few times as well. There's an infrastructure task team being set up as well by that I've seized onto, because that's something that we in business would like to really monitor and get closer to. I did want to ask the question, I didn't, but I would have liked to ask the question, when you talk to private sector, who are you talking to? Because the private sector is such a fragmented being. It's everything from big to small to traders to industrial associations. It's a really messy creature. So I don't know how you talk to the private sector. So I know in SADC we were at one stage talking a lot about unashamedly the captains of industry. Because if some of the big boys decide to do something, things will happen. That's very, I know it's very politically correct to be, and we should really worry about SMEs. I'm a micro entrepreneur myself. I hope I hope I don't ever get forgotten in the process. But the big companies, the big corporates can have a big say. It is true. If BHP Billiton decide to do something, it's going to, like they were talking about with Inga. Okay, it didn't come about, but it created a lot of attention. So as simple as that. Political will comes up very much. There ain't no political will. We in business can cry we can wait till the cows come home. It's not going to happen because, and that's why the Maputo example was given a few times. I think the Maputo project didn't go 100%. No project ever goes 100%, but it's pretty much a success. So let's look at that's another thing we should have said is look at our success stories a bit more. We spoke in the transport thing that I took part in. There was quite a lot of talk about rail, obviously, because we're moving bulk, transporting coal and iron ore and so on. It's copper and cobalt. It's a very big thing. We had quite a good session, I think, on the energy side with looking at the South African renewables program and feeding off it and seeing how it can be applied and so on. And that was pretty good. The IFC is saying that we should think outside the box with the energy thing and to also produce agricultural produce together with energy. That's why when I do the agricultural thing, I always say agricultural people should not be stuck in their sector. They're interfacing a lot with the mining sector. They're interfacing with a wide range of sectors. Venture capital was discussed at great length. Project preparation. That there has to be an element of concessionary funds to get it going, and then various ventures by various DFIs to try and do something about that. The need for information, it was also mentioned here. And then when we spoke about water, we acknowledged that water is a very, very tough sector. I mean, I think everybody in the room would agree. You can't get, water is so close to the heart. It's like somebody said, you need water long before you talk about ICT. So on Maslow's hierarchy of needs, that's really up there. An interesting comment made by OPIC that I think it was OPIC was about the irrigation that's attracting private investment, and then also interesting comment about the French success in water, which having lived in Francophone Africa, I've seen that quite a lot. There is a sort of core competency there. And that's why in Francophone countries some of these projects have moved. And also the concept that water could be more in the brownfields phase where you rather take over an existing asset and hone it and make money from it while providing a public service.
Doing business in Africa. You can't afford to be without Africa Investor.